How's it going, everyone? My name is Dan, but you can call me Malone. And did you know that if you invested just $200 into the stock market each and every month from age 15, by the time you retire, you'd have over $900,000. Pretty crazy, right? But if you waited just 5 extra years to start investing at age 20, by the time you retire, you'd only have just over $600,000, which is 33% lower. This clearly tells us that the earlier you start investing, the better your returns will be in the long term. But more on that a little later. Now, if you're a teenager and you've clicked on this video, congratulations, because you are miles ahead of 99% of your peer group. The next step is to ask yourself the question, what can I be doing today as a teenager to make my life better in the future? Whoa, Dan, hang on a second. Isn't that a pretty heavy question to be asking a teenager? Nope, because you have a lot more control over your future than you might think. And in this video, I'm going to show you how to invest in that future. But before I do, can I ask that you take just 2 seconds out of your day to decimate the like button? As my way of saying thanks for leaving a like, here's a quote to consider from billionaire investor Ray Dalio. The more you think you know, the more closed-minded you'll be. With that being said, let's get into the video. So the title of this video is How to Invest as a Teenager. And as you might have guessed, we're going to be talking about financial investments. These are the classic types of investments which might come to mind, where you make an investment in the hope that it increases in value or provides you with a regular source of income. But we're also going to discuss another very important type of investment, known as human capital investments. It's this combination of both financial investments and human capital investments that will really level up your investing game as a teenager. Let's start off with financial investments. When we talk about financial investments, we're talking about investments in the stock market, in retirement accounts, in cryptocurrencies, etc., etc. The problem is when you're a teenager and under the age of 18, you can't access the platforms which are required to make these types of investments. And as we saw at the beginning of the video, waiting those few extra years to get started investing can have a big impact on your returns in the long term. So you've got money from a part-time job, from birthday presents or elsewhere, and you want to get started investing. What do you do? While you might not be able to set up a normal investment account, you can arrange to have what's known as a custodial account set up on your behalf. A custodial account is an investment account which is set up for your benefit, but is controlled by someone who is over the age of 18, which might be your parent. Money put into the account can be invested in the likes of stocks, bonds, cryptocurrencies, real estate, and even fine art. The best part is that when you become of legal age, you take ownership and control over the account. Now, what this allows you to do is to take control over your money from a young age. You see, the principles of successful investing apply irrespective of your age. It's all about starting early and investing consistently over the course of your life. I started investing when I was 25, which is still young considering nearly half of the general population don't start until their 30s or even 40s. But imagine I started investing when I was 18 or even earlier. The difference in results will be astronomical. And it's not like you need a crazy amount of money to get started. Even investing $50 a month would go a long way, and you can do this until you're earning enough to invest larger amounts. In order for the custodial account plan to work, you'll likely need the buy-in from your parents, both literally and figuratively. You see, your parents might not be investors themselves, or they might have a distrust for the financial system. The vast majority of the population haven't a clue when it comes to their finances, and this more than likely includes your parents, your teachers, or anyone else who's a figure of authority in your life. And this is no fault of their own. The traditional education system, the government, and societal norms have failed us. So when you suggest the idea of investing at age 15, you might be met with some resistance. It's your job to be able to explain why you're doing what you're doing, and there's 2 concepts which you need to understand in order to do that successfully: inflation and compound interest. Some of you will have your own bank account to store money from a young age, while some of you will have physical money hidden away in your room under a mattress. What you need to understand is that each and every year, the money in your bank account or the money under your mattress is losing value. Dan, what are you talking about? How can the value of my money decrease if it's under my mattress? It hasn't gone anywhere. While your money hasn't physically gone anywhere, its ability to buy things has reduced, meaning things have become more expensive. This is what we call inflation, and it's one of the main reasons why we invest in stocks, crypto, and real estate. Think about it like this. If you keep all of your money in a bank account or under your mattress, you are guaranteed to lose money each year. But if instead you invest that money, you at least have a chance to protect its value or even increase its value. So clearly, investing to protect ourselves against inflation is very important. Equally as important is compound interest. Compound interest is the secret sauce to successful investing. It's the key ingredient to those tasty investment returns. Let's say you invest $1,000 in the stock market. In your first year, your investments pay you a dividend of 10%, which will be $100. Instead of spending that $100, you reinvest it back into the investment. Now in the second year, your investments will pay you a dividend of $110, which is 10% of $1,100, being the $1,000 initial investment plus the $100 dividend which you reinvested. So your dividends are now earning you even more dividends. You then reinvest this $110 and the process repeats over and over and over. Eventually, this will turn into very large numbers, but it takes time. That's why it's so important to start as early as humanly possible. Now, when it comes to which custodial account you should go with, that's entirely up to you and where in the world you live. Some key things to keep in mind when choosing your account will be fees and investment choice. You want to go with the provider who gives you the most amount of flexibility and choice at the lowest cost. Another great thing about these accounts is that they can be funded by your parents. Most countries and tax systems within those countries allow a certain amount of money to be gifted tax-free in any given year. In Ireland, for example, this amount is €3,000. So your parents will likely be able to make tax-free investments for your benefit using these custodial accounts. So we've established how you can start investing from as early as your teenage years. But what should you be investing in? There's lots of choice here. Stocks, bonds, derivatives, cash, crypto, real estate, fine art, the list goes on. Because you're starting young, there's no reason why you shouldn't be investing in the riskier asset classes like stocks and cryptocurrencies, provided you understand what you're investing in. The younger you are, the more risk you can afford to take on. However, because most teenagers likely won't want to carry out the necessary research before investing in individual stocks or cryptos, the best choice here is probably going to be a low-cost index fund. Dan, I've heard of index funds, but no one ever explains what they really are. The word index means a sign or measure of something. Therefore, a stock market index is a measure of the stock market, i.e. how well or poorly the stock market is performing as a whole. But we can also measure different parts of the stock market in isolation. So the S&P 500 index measures the stock performance of the 500 largest companies in the United States. So we've defined an index. Now let's define a fund. An investment fund is a big pool of money gathered from lots of different investors and used to invest in the likes of stocks, bonds, and other financial assets. So therefore, an index fund is a big pool of money gathered from lots of different investors and used to purchase shares in companies which are measured by a particular index. The goal here is that the returns of the fund will mirror the performance of the index, because the fund holds shares in the same companies which are tracked by the index. The benefit of investing in an index fund is that you can own a large number of different companies by simply buying one single share in the fund. This investment is convenient, low cost, and diversified, perfect for anyone getting started on their investment journey. The other financial investment to make as a teenager is your emergency fund. This is essentially money we set aside for a rainy day where we might have an unexpected need for cash. Now, when you're younger and have less responsibilities, the need for emergency cash might seem silly, but it's more so about getting used to the practice of setting aside money on a regular basis to build up that discipline. As a teenager, there's no secret number when it comes to an emergency fund, and how much money you want to keep in the bank or under your mattress is totally up to you. Just remember, too much cash sitting in the bank is wasted potential, too little is a recipe for disaster. If all of your money is invested and you have no money money in the bank, you could be left in a situation where you have to sell your investments to access cash in an emergency. This could trigger tax charges, or you could be forced to sell the investments at a loss. The point is that by striking the balance at a young age, you're setting yourself up to be a cash management expert in your 20s. We're now going to talk about the human capital investments that you should be making as a teenager. But what exactly is a human capital investment? To me, a human capital investment is any investment that you make in yourself, which pays you a return by adding value to your life in some way, shape, or form in the future. The return generated from investments in yourself can oftentimes be monetary in nature, for example, a higher future salary. But what we're really looking for from human capital investments is return in the form of happiness, fulfillment, and understanding. Ben Felix from the YouTube channel Common Sense Investing released a video called Investing in Happiness, which I strongly recommend you watch. He makes the point that while money is essential for meeting basic needs and reducing stress, as well as affording us with opportunities throughout our lives, people incorrectly believe that more money today will equate to more happiness in the future. Those who have less time to do things outside of work that they enjoy are less happy, less productive, and more stressed out. Making investments solely to produce the highest monetary return isn't necessarily the best strategy. Instead, it's about making optimized investments to achieve a return that allows you to live a happy life. Optimal investing is a combination of both financial investments and investments in oneself. You as a teenager have the greatest opportunity to shape the life you want to live, and you also have life's greatest asset on your side to achieve it: time. The first investment in yourself to make as a teenager is an investment in your education, more specifically an investment in alternative education. Let me explain. When you go to school, you don't have much choice over who your teacher is and what they teach you. Yes, you have choice over subjects and the level at which you learn those subjects, but you're very much restricted to what the traditional education system has to offer. Ideally, we want to be learning from people who have achieved things that we also wish to achieve. We want to learn by example. Success in the real world isn't defined by how well you perform in examinations. Instead, it's defined by how happy you are in the life you lead. But if your education is restricted to what you learn in a textbook in school or in college, you'll never gain the insight needed to set yourself on the path to success, whatever that might look like for you. This is one of the great failings of the traditional education system. Students aren't learning how to achieve their own version of success because their teachers haven't attained that success themselves. So in order to start working towards your version of success, you need to seek out alternative education. That is, education outside of traditional systems. So what does that look like? Alternative education can come in the form of mentorship or participation in courses outside of school or college. One of the best things that you can be doing is finding people who have achieved the life that you want to lead, dropping them a message and asking for a 10-minute chat. You'll extract more practical value from those quick discussions than hours spent in a classroom learning generic material. The next investment is an investment in your own business. This not only includes investing time and money into building something that you can truly call your own, but also involves subscribing to the idea that you can and will become your own boss. Anything can be monetized these days, and if you truly believe that what you're interested in or passionate about can't be turned into a business, then you're probably just looking at it the wrong way. Everybody needs a project. Working on something that you're truly passionate about naturally pushes all of your existing skill sets to be better. Your projects don't even need to be profitable. Just working on them with the view of growth will do wonders for your self-development. And you're not limited to any one project. You can chop and change or have multiple projects running simultaneously. The point is that you're starting to build this infrastructure around yourself from a young age, and it's this infrastructure which will facilitate your success. I always like to imagine a scenario where I have to introduce myself to a group of people, and I specifically have to talk about what I do. My goal is to make that introduction comfortably, confidently, and with conviction. But in order to do that, I need fulfillment. I find fulfillment in starting, building and sustaining projects that I'm passionate about, and I believe that you can find that same fulfillment in nearly anyone. You just need to invest the time and get started. So to recap what we've discussed in this video, you should be making both financial and human capital investments in your teenage years. Financial investments can be made using a custodial account, and it's important that you get started as early as possible to protect your money against inflation and maximize the power of compound interest. You should also be practicing the discipline of actively saving towards your emergency fund. On the human capital side of things, you should be looking to invest in alternative education through mentorship or external courses. A priority will be to reframe your thinking from a career-based approach to an entrepreneurial and project-based approach. Your teenage years are some of the best of your life and are meant to be enjoyed. Any and all work you put in now to set yourself up for success in your later years will pay very big dividends. Take the time to find your passion and work towards making that passion a fundamental aspect of your life. So I really do hope you enjoyed the video here today. As always, if you did enjoy the video, please do let me know in the comment section below. Leave a like on the video, subscribe to the channel, and I'll see you in the next one. Cheers.